Godrej Consumer has agreed to acquire FMCG business of Raymond Consumer Care. More importantly, the valuation is close to
NBC
2,000.
TV 18 Newsbreak confirmed Godrej Consumer has inked a deal to acquire Raymond's FMCG business. The deal is worth over 2,800 crore rupees and will go through by the 10th of May. It's expected to enhance Godrej Consumer's presence in the deodorant and sexual wellness categories.
Hello everyone.
So today in this video, we'll be speaking about how Godrej Consumer acquired the FMCG of Raymond.
But before that, when every other FMCG business is trying to bet big on the D2C marketplace, that is nothing but the direct to consumer, why did Godrej decided to bet big on the Raymond's FMCG business?
We'll be speaking about this thing, and along with this, we'll see the deal introduction with the major brands of both the companies,
The synergy benefits,
reasons why RCCL is being acquired by GCPL, where RCCL stands for
Raymond Consumer Care Limited,
GCPL stands for
Godrej Consumer Product Limited, and why did RCCL decided to sell,
challenges for GCPL after acquiring RCCL,
the market share and the competition landscape,
financials of both the companies.
the future of GCPL and RCCL.
Without faffing much time, let's jump into the video now.
Chalo.
So the first thing, deal introduction. When it comes to deal introduction, what exactly is this? Okay, as we all know that Godrej Consumer acquired the FMCG of Raymond's, and here FMCG includes two brands. Basically, first one Park Avenue lying under the deodorant category and Kamasutra lying under the sexual wellness category for rupees 2,825 crores on a slump sale basis. So basically, what is slump sale then? Okay, I'll make it easy for you. Slump sale is nothing but a company not only acquires brand or product of another company, but along with that, it also acquires assets and liabilities of another company. And from this, we have so many benefits. For example, say we have tax benefits and company can start its operations immediately. So this is all about the deal. And when it comes to major brands of both the companies, then what are the major brands? In Godrej Consumer, we have Hit, we have Goodnight, Godrej Hair Color, Synthol, etc. And in Raymond Consumer or Raymond's FMCG, we have Park Avenue, Good Morning, Beer Shampoo, Kamasutra Spark, which is a pocket perfume, and Kamasutra, which comes under a sexual wellness category. So this is all about the deal introduction and major brands of both the companies.
Now let us come to the synergy benefits. I have divided the synergy benefit into the three parts. The number one, the distribution. The second one, the cost synergy. The third one is nothing but the premiumization play. First synergy benefit, that is nothing but the distribution. So when it comes to distribution, right, Godrej has a strong distribution. They have around 4x times that of Raymond, and also with this acquisition, they are getting benefit of the chemical footprints of the Raymond in the country, and also the strong retail presence of Raymond, that is of around 10 times that of GCPL, which is around 6.5 million stores. When it comes to the second synergy benefits, right, that is nothing but the cost synergy benefit. So in cost synergy benefit, we see that Park Avenue is at number 2 as per the data from Nielsen. The only ahead of it is nothing but the Venice Fog. So here is an interesting point to note that Raymond is standing on the second position without spending massively on advertisements and promotions. In fact, while Raymond spends roughly about 5% of its revenue on ads, whereas Venice spends around 13 to 20% of its revenue on ads. So you can see a clear margin of difference between the cost synergy. The third synergy benefit, that is nothing but the premiumization play. So why is Godrej betting big on this premium, that is condom premium market space? So we can see that before 2017, people used to buy very low price condoms, which were obviously not safe. But after 2022, the whole sentiment changed, the whole consumer sentiment changed. So people are now buying condoms with a price of above rupees 100. But why? You know why? Because if you are doing something for the safety, then it has to be better of a great quality. Then obviously great quality comes at a very great price. So Godrej is betting big on this premiumization play category. So here comes to the end of the synergy benefits.
And now we have the reasons why GCPL thought of acquiring the FMCG of Raymond. So there are basically 5 top reasons. The first reason being that Godrej Consumer can increase its TAM. So what is TAM here? Okay, TAM is nothing but total addressable market. Here Godrej Consumer not only acquires its own consumers, but it also acquires and acquaints the consumers of Raymond. So this is the first reason. And second reason being that Synthol was proved as a great failure when it entered to a deodorant category. So regardless of making further R&D on synthol, Godrej thought of acquiring such brand which is already stood up in the market, and here that is none other than Park Avenue. And the third reason being that deodorants solve the unsolved problems, and as India started experiencing more humidity these years, so even in future the same thing happens and there is a great market for all the deodorants. And as the CEO of GCPL, who is Sudhir Sitapati, says that the sentence will be reversed, as nowadays we say that deodorant is a want, not a need, but it will be reversed as deodorant is a need, not a want. So it solves the unsolved problem. And the fourth reason being that both Park Avenue and Kamasutra are strong under-leveraged brands, where Park Avenue stands second in the market position and Kamasutra stands third in the market position. And the fifth reason being that in deodorants category, there is very less per capita consumption. If I give the statistics of per capita consumption in many countries, say it is 0.4x in Indonesia, 0.05x in Brazil and 0.04x in USA. So this is all about the top 5 reasons why Godrej Consumer acquired the FMCG of Raymond. Having so many benefits, why did Raymond thought of selling its brand to GCPL? Okay. Here are the top 3 reasons for that. First reason being pretty great valuation. When Godrej Consumer gave a valuation of rupees 2,825 crores, literally this was one of the reasons for Raymond to say yes for the deal. In fact, before this, a company called Good Glam had also thought of acquiring the two given brands of Raymond, but both the parties did not come to a right valuation and the deal got cancelled. And the second reason being that they wanted a demerger of RCCL, which has the FMCG category of Raymond, and Raymond Lifestyle, which has the shirting, garments and textile category. They wanted these two brands to demerge from the Raymond, as many people don't know that the Raymond's core real business is not garments or textile, but it is real estate.
With this move, now Raymond primarily will become a real estate player, like you've mentioned earlier. What is on that? What's happening on that front?
Well, real estate has done well for us. We're the number 1 developer in the Thana market today. I think we continue to push in that space.
So the third reason being that RCCL has a debt of rupees 2,000 crores and they wanted to clear their debt by making their company highly liquid. RCCL offered a deal of rupees 2,825 crores, where 2,000 crores will be given to clear all the debts and remaining 825 crores will be in the pocket of Raymond's or RCCL. So these are the top 3 reasons, even after having so many benefits, which made RCCL to sell its 2 brands, Park Avenue and Kamasutra, to GCPL.
Understand the challenges about this deal. So when I talk about the challenges, right, the first challenge is nothing but the TAM. So TAM being is nothing but the total addressable market size. So Godrej have already defined their market size, but since both the Kamasutra and the Park Avenue are not the market leaders in the respective categories, the next challenge is nothing but the brand stickiness. In the FMCG space, the consumer tastes and preferences keep on changing day by day. Even I, being a consumer, I like to explore and discover the new fragrances each and every day. So there is an absence of the brand stickiness towards the new brand or the existing brand. So this might be a great challenge towards the Godrej. Challenge is nothing but the brand shuffle. Remember the HUL's ads where every woman get wooed when men used to spray? That was the advertisement they used to run, but not anymore. That was a market leader and had commanded a great lion's share in the past, but not anymore, because the brand shuffling keeps on changing due to the advertisement spend and even the promotions. So this might be a great challenge for the Godrej Park Avenue brand. The Good Glam's chief business officer, who had earlier wanted to acquire the deal, but he said that he refused due to valuations and many reasons. But he also thinks that the only way for Park Avenue and KS to grow in the deo space was to innovate, because at the moment is just price war to replicate with the constant of 2+1 offer or the EDLP, that is nothing but the everyday low pricing offer.
Market share and competition landscape. When it comes to market share, who is the market leader? Of course, it is Vinnie's Fog acquiring 16% of market. Second, Nivea, which acquires 12% of market. Third, ITC is engaged with 11%. And fourth comes the hero of our video, which is Park Avenue with 10%. Followed by Axe Wildstone and Denver. So this is all about the market share. And when it comes to competition landscape, why can't we compare the acquisition deal with a peer who is Vinnie's Fogg? When KKR, which is a private equity firm, acquired Vinnie's Fogg, it was 35 times of its EBITDA of FY21, which is financial year 21. And in this case, Godrej acquired Park Avenue and Kamasutra 55 times of its EBITDA of financial year 23, or say 4.6x of its sales of financial year 23. So this is all about the market share and competition landscape when compared to the acquisition deal.
So let's come to the financials of both the companies. Next aspect is I have compared the revenues of Godrej Consumer Product Limited with its peers like HUL, Dabur, Marico, P&G and Colgate. You can see that every other company with respect to Hindustan Unilever has grown at 15.5%, whereas Godrej had grown at 8.5%. So next thing is nothing but the share price of Godrej Consumer Product Limited with respect to Hindustan Unilever and also the Procter & Gamble. You can see that in the past 5 years, from May 2018 to May 2023, you can see that Godrej Consumer Product Limited has given a return of around 34%, whereas Hindustan Unilever has given a return of 67.63% and Procter & Gamble has given a return of 45.52%. Let's move to the financials of the RCCL Limited. So you can see that in RCCL Limited in financial year 23 they had made a sales of around 622 crore and their gross margin is in line with GCPL. And if you see the sales mix structure, you can see that the major of the sales portions come from the deodorants and the fragrances and the condoms category. And when you see the RCCL's financials with in line to the GCPL's, you can see that the revenue comparisons and also the EBITDA margins and also the growth margins. So you can compare all these things in the given chart above. If I talk about the share price of Raymond Limited, basically it is not a proper comparison with respect to Godrej Consumer Product Limited, because the Raymond Limited is a conglomerate of many businesses like textile, real estate, FMCG and many other things. So but when it comes to Godrej Consumer Product Limited, it is a very niche business, especially into the FMCG business. So it's not a proper apple to apple comparison. But when I compare the share price return, just for the comparison's sake, you can see that the past 5 years return is nothing but the 54% when compared to Godrej Consumer Product Limited, and the past 1 year return is nothing but the 84% return in the Raymond's, and everyone was betting big on this stock in the last 1 year. So this is how I conclude the financials of both the companies, that is nothing but the GCPL and the RCCL. Comes to the future of GCPL, right? Let us hear from the CEO and MD himself, Mr. Sudhir
Our vision
Sidapati.
as a company is to build towards delighting 2 billion consumers globally, and this acquisition allows us to complement our business portfolio and growth strategy with under-penetrated categories that offer a long runway of growth. Raymond is a leading player in the deodorants category and is the number 2 player in deodorants and the number 3 player in the sexual wellness category with brands like Park Avenue and Kamasutra. Both these categories, we believe, have the potential of delivering comfortable double-digit growth for many, many years to come, given the very low per capita consumption of India in deodorant and the vast opportunity to premiumize the condoms category. We look forward to building on this potential by unlocking significant integration synergies with our business and channel distribution of RCCL that can enhance GCPL products as well.
Okay, after getting to know the future of GCPL, now we have the future of RCCL. So what will be the future? Okay, here we have it. As I told before, now RCCL and Raymond Lifestyle will be demerged from Raymond Limited, and Raymond Limited will be called as a real estate company with the investment in engineering and denim business. And now when RCCL's brands like Park Avenue and Kamasutra are being sold to Godrej Consumer, so our Raymond Lifestyle, which is a denim business company, and now when RCCL's brands like Park Avenue and Kamasutra are being sold to Godrej Consumer, so our Raymond Lifestyle, which is a denim business company or a B2C shirting, will be coming under RCCL category, and RCCL will be again listed on stock exchanges separately from Raymond Limited. And RCCL will be entering into the stock market or stock exchanges by taking 12 to 15 months, as its CEO says. So this is all about the future of RCCL.
So here we come to the conclusion of the case study of Raymond and Godrej. So in the upcoming years, it will be very interesting to watch how does GCPL actually leverages the under-penetrated category of both the deodorants and the condom market with each of them having a market size of 5,000 crore and 12,000 crore respectively. And for more such content, please do follow